Hello and welcome. You're watching India Market Open and the bulls are back. It's truly festive in more ways than one. We look dressed up and of course it's Dhanteras.
Yes, happy Dhanteras to both of you. Again, looking so pretty, both of you. So
we're going to be serving the looks all through this week and the festive cheer. Ready in
Imagine how lucky I am.
Well, you're part of it, Niraj.
You are part of the looks.
I agree completely. Well, thank you so much. I take this as a compliment. No, but to all our viewers and their families and everybody around, happy Dhanteras, and may the festive cheer just spread all through, independent of what the markets do.
And markets are coming on board, I would say, because the kind of swing yesterday was truly heartening. Hopefully, it's not just about a short covering and more to go. Let's start with global cues this morning before we set you up for the day, and a decent day, I would say a winning day for Wall Street as well. The major US indices ended in the green, S&P 500, NASDAQ. So low crude prices is helping. Dropping bond yields maybe not that much, but major US indices definitely in the green. We'll pull up Dow futures as well. Two big events as far as US markets are concerned. Elections on November 5th. Fed meet on November 7th. So that becomes important, that becomes key. Dow futures slightly in the red, NASDAQ was completely flat. What to watch out for? Treasury yields continue to rise. The 10-year is now at 4.26%. That's the highest level since July. And that is a bit of a concern as far as global markets are concerned. A little bit of a fly in the ointment. But from the India perspective, as well, I mean, rising yields perhaps not the best. On the other hand, crude continues to slide. Your Brent is now under $72 a barrel. The city forecast has been cut by $4 to $70. The fact that Israel spared oil facilities in Iran during the counter-strike is something that has given some breather and pause to markets. Asia, Japan has slid. Japan, of course, in focus after the ruling party loses. Recovered now, about 0.5% up. And all eyes on what happens with the yen. Will the Bank of Japan continue on its monetary path? Does it change with the key party running the government now weakened in its majority? Let's pull up the Nifty implied and see where we are at this morning. And not bad. I mean, a spot of green. I'll take it. About 8 points up as far as India is concerned. Just want to talk about fund flows. So FIs have continued to sell yesterday, 3,228 crores. DIs bought 1,400 crores, yet we closed in the green. So what was clear is that a lot of that push not necessarily coming from domestic investors. Are the retail investors coming in and buying and deciding to spread some cheer is the question, because it was a fairly broad-based recovery yesterday.
It indeed was broad-based, and the good thing is that you had a good set of earnings, so the reaction, of course, was positive. So we had a lot to cheer about, but the fact remains it was a technical bounce back, which was much needed after the very big fall that we saw in trade last week. What you want to keep in mind is traders and analysts still believe this remains a sell-on-rally market, and you've got to have consistent up moves towards, of course, 24,500, 24,800 for this to be a sustainable up move. But whatever we have, we'll take with both our hands. The bulls are in a good place this morning. We finally snapped a 5-day losing streak. Just to quickly highlight for you what happened, all sectors went home with gains. Broader markets performed quite well after the big sell-off that we saw last week. 35 of the Nifty constituents ended in positive territory. The star of trade was PSU banks. The PSU banking index was up nearly 4%, and metals didn't do too badly either on back of some amount of global pickup on the LME. Bank Nifty was the key contributor to Monday's trade. So if you were long Bank Nifty and long Nifty, you've gone home laughing for the bank yesterday. ICICI Bank, good earnings, markets rewarded it. Bandhan Bank did well too. Yes Bank included. All these counters lifted the Nifty bank in trade. Coal India had it rough, down over 4% on weak earnings. Bajaj Auto continued to decline, losing for the third straight day, down 19% in the month of October alone. When you look at what's happening the F&O side of things, the put-call ratio stands at 0.96 versus 0.87, which is good news. You've also got Nifty 50 futures that have crossed 12.1% in open interest on Monday, with current rollovers at 5.3, and on Bank Nifty the rollovers stand at 58 0.8%. That's important because you've got your monthly expiry this week. Apart from that, implied Nifty looks okay this morning. I don't know whether this is a fundamental recovery of sorts, but for now, to me, it seems like a technical recovery that was much needed after the fall we've seen in October.
Yeah, but I think because it's become so difficult to predict when the dips will get bought into or to what extent it goes to, I'm on the camp which it's been saying about how quant indicators have been talking about this bounce back, that very likely that this could sustain as well. Because, I mean, just a few texture points here. The FI short aggression on index futures has come off quite meaningfully from what it was at the start of the October season. Also, for whatever it's worth, the cash selling numbers, even though high, but are becoming smaller. But they're becoming smaller than what they were at the start of October, for sure. We're not seeing that 8,000 number, even 6,000 number. It's now kind of maintained around 3,000.
I think this was the first morning where I said, where we saw that, or on Friday, it was not a valuation concern anymore.
Yeah.
You know, normally it's like India gets sold because of extremely premium valuations. Those headlines have disappeared.
20 times.
So see what Rajiv Batra said also to us yesterday, that bears beware.
Bears beware. Now.
So now you're going to that situation where a short position could be a little riskier than it was perhaps last week.
Most certainly. So that is one. And two, to my mind, the biggest bull factor now is oil. You look at any part of aggression that has happened in Middle East or OPEC announcement, it has not crossed above 95 in the worst case scenario about 6 months back. The Iran-Israel aggression, which was started to be the biggest thing, right, in Middle East, and oil went to 80 and has pulled back. So I somehow think that that's a big positive for India. And yes, IT may not rise. I mean, today's City Note and Surendra Gold tracks it so closely, saying that it's just a dead cat bounce and they are concerned there. But BFSI at the margin is looking okay. We've been cribbing about how ICICI and HDFC have done well. Some of the others haven't. Bandhan did okay, Federal has done okay, some of the others are starting to show some positive. So at least BFSI doesn't have too much of weakness save for a few. So yes, separate the men from the boys, and ICICI and HDFC will do really well, better than others. But some of the others are maybe just starting to not do too poorly. So that is one more thing. And the last point today, I wonder, guys, if Volkswagen shuttering down 3 factories, does it have an impact on some of the supply chain linked stocks to VW in India? So the likes of Samvardhana, Motherson, etc., could they be in focus today for the wrong reasons? Maybe that is something to watch out for.
My only limited point is, sure, valuations look okay, earnings haven't been too bad. For whatever it's worth, barring BFSI, no other sector has outperformed earnings expectation. And we cannot get ahead of ourselves. It's just day one of a recovery after falling for the last 16 days. Yeah. Retail investors have been buying all through October. Their buying number was 96,000 crores. FIs have sold 98,000 crores, but DIs have bought. So it's not like they've checked out of the market in any way. But the fact remains that we still have to tread with caution. I know we'd like to get excited. It is Diwali. It is the week when you want the markets to, be creating wealth for everyone, and everyone wants to be overjoyed. But still tread with caution. While fundamentally there's no reason to sell this market, but who's to tell? We just have day one in where we recovered yesterday.
I'm wondering if people are going to spend some money, perhaps ordering gold coins within 10 minutes.
Zepto. Swiggy Instamart now.
Zepto, Swiggy Instamart, Blinkit, you're spoiled for choice.
I'll go there. Today I will go there. The feeling of buying it. Sorry, I know we are going to get to stocks.
808.
Yeah, but just the feeling of going to a store and buying gold today on Dhanteras Day.
No, you should be buying sovereign gold bonds in the secondary market or gold mutual funds.
No, that's the practical mind. That's the left brain or the right brain. What is it?
She loves diamonds.
He's not buying me any, Tamanna.
I'm not buying myself also.
But yes, we should move on to stocks very quickly. Lots and lots of earnings. And also just quickly, in the US, you've got 3 big tech earnings coming. So, of course, those markets will watch out for Apple and Microsoft, amongst others. Back home, we are through the earnings season. So you've got a few that we've got to track. Bharti Airtel stands out. Some brokerages are calling it a league in itself. The stock will react to its earnings. When you look at it YOY, which may or may not be the right way to look at it, the numbers look fantastic. Q on Q, there's a dip in profitability, but that was on back of an exceptional loss item. So what you see on the screen does not mean that operationally or business-wise there's trouble at Bharti Airtel. Profits are down 13.6%, like I said, on back of an exceptional loss. Revenues have grown 7.7%. EBITDA has increased 10.5%. And all these numbers, remember, are Q on Q. And that becomes the right way to look at it because there are no seasonal factors as such in the telecom sector. Margins have expanded quite well at 53.1 versus 51.8. Other income has fallen as well, and tax expenses have jumped in this quarter by about 300 crores. ARPUs are looking very good and very healthy at 233 versus 203 in the same quarter, in the previous quarter of financial year 24, up 15%. Remember, their India business is doing really well. Africa is also holding up the momentum. Across India, mobile services is up 18.5%, led by tariff repair, strong smartphone data customer additions, and a better product mix that's out to be offered. So all in all, Bharti Airtel, good set of earnings coming in from them. Apart from that, Suzlon Energy, what a set of earnings there. Profit is up 96% to come in at 200 crores versus 102. Revenues are up 48% at 2,093. Margins have declined to about 14 versus 15.8. Net profit, like I said, is up 96%. So that is the standout number on Suzlon Energy. The company's profits have risen due to higher deliveries. Their order book stands at 5.1 gigawatts as of October 24, which is 8% higher than was seen in September 2024. They also signed that significant order and deal with NTPC Green Energy, which the street is also quite excited about as they will be listing. But all in all, I think on every parameter, Suzlon becomes a meter. Niraj is looking at me from the corner of his eye, so please.
just one. So,
he tracks this company closely. So
I was tempted to leave it, but I was like, this is too tempting to let go.
No, so the order winning is great. Margins may have been a bit depressed because of the execution thing, but I think the Q2 execution relative to what Inox has done seemed a bit lower, just 254 megawatts. The only respite for Suzlon is that
But it's execution.
Yeah, execution. So, and which is what? So, does it, I mean, I don't know that, but does it mean that their FY25 overall execution gets impacted? So, that's the only worry. But the
second half of the year sees a pickup because of delays and order backlog. So we are looking at this a little more positively. I know Niraj is of the opinion that Inox Wind in terms of execution has done better, but it could very well mean that
H2 it has.
It could very well mean that H2 sees a better pickup on back of the backlog. The third stock on my radar is Kalpataru. I know there are lots of counters, but this one also reported very strong numbers. Profits jumped 40% to 126 crores. Revenues grew 9%. EBITDA has soared 18% to 438 crores. Margins have expanded 8.9 versus 8.2. They have a very significant order book. So their order book stands at 835 crores, including the international subsidiaries. Year to date, total order inflow stands at 11,865 crores. And they have an additional L1 position of over 7,000 crores outside this 11,865. They have signed that binding agreement to sell Vindhyachal Expressway for an enterprise value of 775 crores. So approvals are in place, but of course Vindhyachal Expressway deal or sale will only be done in FY26. So Kalpataru, solid earnings, solid order flow, looks extremely healthy from the way I look at it, and they've had a good quarter too. Suzlon as well, I'm going with good quarter. Bharti also is a good quarter.
All right, so three positives. So I think...
I was extremely selective given it's Dhanteras. I mean, no bad stocks on my list.
So my first one is a so-so. Actually, the numbers aren't great on the face of it, but the fact that they have this deal from Air India might help. And, you know, if you could get those details up. Tata Tech is what we're talking about first up. And Tata Tech was a weak quarter, to be honest, with gross margins flat into key segments. Which is why thumbs down. They're packed to craft interiors for Air India could be seen as a bit of a positive, so that could cushion the blow. But if you look at the core numbers, revenues up 2.2% Q on Q, EBIT up 2.1%, margins completely flat, but net profits down 2.9%. I think what's more concerning is that there are two key segments, which are services, that 78% of total revenue has grown only 2%, and gross margins in this segment have fallen a tad, not too much, from 31.1 to 29.9. In terms of tech solutions, another big segment for them, 22% of total revenues. You've seen gross margins also come off from 18.2% to 16.7%. Here's what Citi is saying. They've maintained a sell on Tata Tech with a target price of 900 rupees because they think that revenues were below while margins were largely in line. The management says H2 will be better than H1, driven by the order book and pipeline, while Q3 will be impacted by seasonality. That means a lot now depends on Q4. Ramp up of specific deal wins will likely aid growth. And remember, we're speaking with the management later in the show today, so quite a few questions there to ask about the numbers and how they stack up. But for now, Tata Tech maybe not such a big thumbs up, a bit of a neutral to thumbs down kind of a situation. Unicommerce, on the other hand, I thought this was interesting. Kunal Bell-backed company, first set of results after listing, and good numbers for Unicommerce e-solutions. Revenue up 13% year on year at 29.3 crores. EBITDA up 58.7%. Margins have grown robustly from 13.9% to 19.5%. So I think maybe Street will take some heart from it. And profits also up 21%. So this is definitely a thumbs up and one to watch out for. Railtel also a thumbs up. Decent set of numbers. Revenues up 41%. EBITDA flat, I would say, 1.5%. Margins have dropped a fair bit. So this could be the fly in the ointment. If you look at it this way, definitely a margin miss. Slid from 21.3 to 15.3%, but net profits are up 6.5%. So that's one. I'll come back to some IPOs which will be on watch, and we'll talk about Swiggy as well. But first, your stocks for today.
Yeah, so I mean, I'm leaving out the Bharti twins. I think both of them kind of did okay per se, and you covered one of them at least. But Shelly Engineering is the first one on my list, simply because it's also a stock that hasn't corrected in this corrective move. Mid caps, small caps have been taken to the cleaners. Shelly's had a fantastic last couple of months. No correction whatsoever, staying around this 950 mark. Look at the numbers. Revenues up 22% at 192 crores versus 157 crores. So that's one. Margins up 599 basis points. That is nearly 6% difference between 20.95 and 14.95. Look at that expansion, as a result of which bottom line up 102% at 21.9 crores versus 10.8 crores. So Shelly Engineering is the first one on my list. So do keep an eye out for this one in the session today. I also thought that the numbers that came in from Paradeep Phosphates were pretty strong. So 4.4% uptick in revenues. So that's okay. But the margin expansion, very strong. 11.1 versus 7%. Net profit at 228 crores versus 89.4 crores. So that one did really well for itself. And while there are a clutch of other margin gains, we'll talk about them. I want to highlight a brokerage note as my third stock, because that stock took a tumble of 8% yesterday, and that's Interglobe Aviation. Now, Morgan Stanley's come out with a note on Interglobe Aviation, and Morgan Stanley says that they maintain an overweight rating. They have hiked the target price to 5306 from 5245. And they say any weakness in the stock, this is post yesterday's fall, so any further weakness in the stock is an opportunity to add, because while they concede that international side is seeing rising competition, but they say that the demand is strong. Most importantly, it's the valuation argument. They say the stock trades at about 8.4 times EV/EBITDA, closer to the pre-COVID median, and it will find support for about a 10% premium valuation over the pre-COVID median. So the valuations essentially make Morgan Stanley a buyer. Let's wait and watch if there is any uptick in this one today, or if there is some buying that comes in if it starts off lower. My top three.
Just a couple of smaller ones to add. JSW Infra reported numbers, good earnings. Profits were up 46%. Revenue has grown 18%. So all in all, JSW Infra is a thumbs up in terms of earnings reporting this quarter. Quest Corp, I don't know whether we referred to that, but their profits are also up at 93 crores versus 70. So a 35% jump in profitability. Revenues are up nearly 10%. Genesis, I don't know if we track this one closely. It's a very small company, but they've reported a profit of 11 crores versus a loss of 3 crores in the same quarter last year. Revenues are up 120%. So small company, but great earnings. The stock, of course, had gone home with a gain of 8% yesterday itself. And just a quick update on Deepak Builders, because it was a brand new listing yesterday and it did not get the sort of welcome that Waaree Energies got. But the good news is that Macquarie Emerging Markets Asia Trading and Macquarie Bank have each acquired 0.74% stake in the company at 180 rupees a piece. Additionally, Kirtan Maniklal Rupalia has also bought 1.2% stake in the company at 178. The counter did see a 20% down circuit, but the fact remains that some very solid hands have bought into Deepak Builders. So this counter could see a recovery on its second day of listing.
Okay. Tamanna had some stocks?
No, just since we're getting into the IPO bit of it, I wanted to add Afcons, which has been tepid to say the least. So, I mean, I think it's good that the street is getting selective on how it's treating IPOs, and SME IPOs, I mean, in the context of Deepak, are also, getting treated perhaps with a more critical lens.
Yeah, but this is what I don't get, because when Deepak Builders opened for subscription, it was oversubscribed 47 times.
Maybe the size helped
but
it.
I mean 20%, and even the grey market premium was indicating to a 30% upside,
GMP,
which I cannot take seriously, I know. But
GMP is a little iffier most
and
times.
with Afcons, I don't know why the sentiment's turned, because it's actually a pretty solid company, not just locally, but globally. It comes from a pretty big brand.
Correct.
Been in the business for 60 years.
Pedigree.
Sajid is, again, giving me the look. You want to come in because you've talked to that management of Afcons.
He's talking about Swiggy.
Okay, we keep the focus
but
on that.
Before we get to IPO, you want to finish this point on Afcons? There are some stocks that I just wanted to highlight.
Basically, 36% subscribed as of now. HNI is 70% subscribed, and
retail is
36
dismal.
I think it may go through because we've been having a bad
secondary market. Yes, the fear that you won't get listing gains, maybe.
That's something which is preventing. But I think QIB.
The question to ask is, will that prevent Swiggy? But we have caused the Niraj has a few more stocks.
No, just one plate. So we're talking about stocks having margin gains, and we made a plate of companies which have got a very strong margin performance this quarter. That's the last set of stocks. Arvind Fashions, Gillette India, you highlighted Unicommerce, so that's the third one, and SJS Enterprises. All of these four, very strong margin performance, and therefore you might want to watch out. Maybe there could be reactions in each of these in the session today. I mean, most people have, except for me and Sajid maybe, a lot of people have stopped shaving because people sport a beard. But hey, Gillette numbers are looking rock solid.
I mean,
you're the driving force.
No, not driving force.
I'm not going to say anything.
No sexist comments required here, Tamanna.
There's no sexism here. It's just that a lot of men following the Indian cricket team are sporting a beard. There are very few who are clean shaven.
Okay, I was going to say
the women are shaving, is it?
Yeah, I mean, everyone uses their product.
Let's quickly move on from this conversation,
Swiggy.
guys.
Another product that everyone uses is Swiggy. They have become a little more realistic in how much money they want to raise. Details of the RHP are out. What's standing out for you?
Yeah, couple of things. The valuations seem to be very fair. It's almost half of what Zomato is, and as we speak, especially from the market cap to sales multiple point of view. What is more, gives you much more color in the numbers is that yes, their quick commerce business is growing at a fast pace, but it's currently at the end of Q1 is around 12.5% of the total revenues. Now, if you compare that to Zomato, quick commerce is coming to nearly 50% of the food delivery revenues, which is there. Here it is around 1200% of the total revenues, which is coming in. What is also important is that they're making a positive contributing margin for food delivery, but the quick commerce is negative in that sense, and EBITDA.
So just for a comparison, they are not betting on their quick commerce as much as Zomato is.
No. They are betting big on quick commerce.
Instamart is their Blinkit?
Instamart is a Blinkit, and it's done through Scootsie. So they are expanding a large, more than 50-60% of the fresh issue is going into quick commerce for them in that sense, right? So but Swiggy is at least 4 to 6 quarters behind Zomato in terms of profitability in that sense. From a top line point of view, just to give an idea, right? Q1, Swiggy had a revenue of 3,200 crores. Zomato had a revenue of 4,200 crores. For the FY24 numbers, if you look at, Swiggy was 11,000 crores and Zomato was 12,000 crores. So, if you look at the market value which has been given to Swiggy, which is 87,000 crores, which is $10.4 billion odd, that compares to 2.24 lakh crore, which is for Zomato. In that. So the multiple is 5.6 times market cap to sales for Swiggy as compared to 11.1. And assuming FY25 numbers, which an annualized basis, which has been done. So it is coming at a discount to Zomato, and I think the growth potential is going to be the quick commerce business which is going to come in, because quick commerce contributing, the negative margins are contracting. Q1 it was minus 3.6 if I'm not wrong, to minus 3.1 as compared to minus 6% in FY24. So it is moving towards profitability in terms of contributing margins, which is there, and that's what I think the street would look at, and I think that's the reason why it's coming at a very muted valuation as compared to what we were, which has been talked about, $15 billion, and now it's coming at $10.4 billion. So that's the kind of upside which could be there for the market.
Okay, so Swiggy is exciting. More realistic. I think it's a good thing. It's a good thing if companies become more realistic. One or two tepid IPOs sets
I think
everyone's
Hyundai's disaster has set the tone. Very quickly, the price band?
It's said to be between 371 to 390, but it's not been official yet. So
but closer to 370 to
390 is the thing, which is the because last placements were done at around 360 rupees or so.
360 was done, but I believe a lot of retail platforms have been selling this for 425, which is what worries me, because if you've bought it at 425, subscription at 390 is what it looks like.
But that's something which we saw in one or two IPOs as well, where the retail was going at a very high premium, and then there was a
Bharti Energies, the unlisted price was 100% cheaper than what the stock actually opened in subscription.
Yeah, exactly, right? So that's one thing which we need to, and also the fact next week when it opens, there are a couple of things coming in. You have the US elections.
Oh yes, of course.
You have a Fed meeting. You have Acme, which is opening as well.
Yeah.
And then you have Swiggy, which is opening. So, it's going to be...
I think US elections might not have too much of a dent on Swiggy. Maybe market sentiment overall.
Market sentiment and how the foreign investors are reacting to it. So,
what if Donald Trump were to tweet that I'm ordering through Swiggy? That would be something.
Good, but they do have a service now that if you're sitting outside India, you can order for your relatives inside India.
Yeah.
So that's interesting. But anyway, enough about
Sujit, can you call Donald Trump, please? while we are building sandcastles, might as well.
All right. So, that of course is all things Swiggy. But remember, we're celebrating the festive season all week here, and we have such a fantastic lineup for you. As part of our special Diwali programming, we spoke to two market veterans, Ramdev Agarwal and Manish Chokhani, about how they see this Samvat. Here's what they had to say.
Valuations in India are not cheap by any measure, and the best kind of 24% and 40% CAGRs we've seen in the index or in the mid-cap, small-cap index is not going to repeat, because the underlying earning growth is low teens currently, if that. And the market needs to digest the gains it's made. And the normal capitalist response to this kind of demand, if Indians are putting in almost $50 billion a year now into equities, which is still kind of 5% of the annual saving rate, not even that. The supply has started meeting that demand. If I just take the last 6 months, there's been about $30 billion of fresh issuance, of which only 15 has gone back to companies for creating fresh capacity. $15 billion has gone back to promoters who have sold, or to the private equity investors who had got early into these companies. So some amount of it, of course, will come back to the markets. But for instance, you had the Hyundai listing today. It's a net $3 billion outflow from India back to the strategic investor over there. And this trend has been seen across. People from US like GE, Whirlpool have sold. From UK, Vodafone and BAT has sold. From Japan, Sumitomo has sold. From Singapore, it's been Singtel, which has sold. And even Indian promoters, whether it's Tata Sons, whether it is Vedanta, they have all come and taken chips off the table. Hopefully, they will come and reinvest. Because like it happened with the first flush of private equity investing, when Warburg Pincus made $1 billion exit from Bharti, it opened the floodgates to private equity to India. And therefore, I'm quite hopeful that a lot of these foreigners who have tasted that India can provide you these kind of returns and this kind of money will only serve to attract a lot more FDI and a lot more foreign investors in.
Welcome. We are taking stock of the futures and options space this Tuesday morning. Well, we do have a little bit of positivity return to Indian markets yesterday, and that was evident in the benchmarks. We had some buying return to a handful of stocks as well, and even though the momentum wasn't there, well, the hope is that we likely could see some amount of consolidation. The question really is, where do we go from here? So let's start by taking a look at how things have fared yesterday. So we did see an advance of around 0.6% for the Nifty, and while open interest of course will decline because we are in expiration week for the month of October, it's the same for the Bank Nifty, an advance for the spot to the tune of around 1%, and well, unwinding in the October futures. As far as the Nifty is concerned specifically, we've been talking about a 500-point range between 24,000 and 24,500. That's denoted by maximum open interest in those respective puts and calls right now. And we're in somewhere in the middle of that. So we're likely to see that range-bound trade. The real move will perhaps depend on whether or not we in fact do see the Nifty move about 24,000 and then sustain about that. That's why you see a lot of shorts around those particular calls being unwound, and you will perhaps see a little bit of an exacerbation of that Nifty move higher. But until then, we'll have to just wait and watch. Of course, moving in, we are also considering a lot of other factors that do come into play. But Fin Nifty expiry today, one of the last few Fin Nifty expirations that we're going to get to see over the next 2 or 3 weeks. Well, not much after that, but for now, options premiums continue to be restricted, and of course there's a lot of writing going on, which means that further writing will always lead to a lot more volatility, relatively riskier positions. But on that note, let's take this forward and see what are the other trading ideas that we have in these markets, where we have Akshay P. Bhagwat of JM Financial who joins us on the show. Akshay, good morning and thanks so much for joining in. I reckon the first stock on your radar is from the banking space. What do you have for us, and what kind of structure are you deploying here?
Good morning, Agam. Season's greetings and happy Dhanteras to you. The first stock is Bank of Baroda from the PSU space. And if you look at the broader price structure, this bank has stood strong in the last few trading sessions. It's been in a range. And there was a fantastic up move, which we did see in yesterday's trading session, which makes us believe that this stock is possibly heading for 260 plus in the month of November. So we are positioning a vanilla buy call in the options segment for the November series expiry. The strike to buy would be the 260 strike, which is a deep OTM call, which is roughly priced around 4.5 as we closed yesterday. The idea is that if the stock moves up and crosses 260 within the next 8 to 10 trading sessions, easily targets of 7.25 to 9 will be achievable. You can keep a risk or a stop loss of 1.9 on this trade.
And what's the other stock on your radar, Akshay, and how I believe you have a spread here?
Yes, so the other stock is DLF from the realty space. Results are done, and the reaction post-results has been exceptional. The stock was in fact up almost over 7% at one point of time in yesterday's trade, has rebounded back again from the demand area of 790 to 800, from where time and again it has been reacting very strongly. The setup is indicating that the stock might cross 930, 940 odd levels going ahead in the month of November, December. We are taking targets of around 900 for November, for which we are positioning ourselves with a bull call spread, which helps us to keep our losses in control and to tide over the volatility in the current market situation. So the trade is to buy 830 call for the November expiry at 25 and simultaneously sell a deep OTM call of 870 strike at 11 odd rupees. The broader profit expected in this strategy is around 13,500 with a stop loss of 7,500.
Akshay, I just have a follow-up question on the spread specifically. What often happens is that a lot of these stocks in the option space, where the options are not always very liquid, which means that the bid and ask spreads between them are sometimes quite large. What is the distance that you could potentially like to see between a bid and ask spread that you would think that these options are liquid enough for you to in fact venture in? And the second part of my question here is that often when we move closer to expiry, a lot of these option prices do go a little bit haywire, and I'm talking about the less liquid stocks. and sometimes even some of your more liquid ones also become less liquid towards the end of expiration. How do you deal with these challenges when we deploy spreads?
Well, ideally, you should only be trading in options where there is ample liquidity. Ideally, the spread difference should not be more than 0.10 paisa. Trade in stocks where the liquidity is evident at least 4 to 5 strikes from at the money where it trades, because in case you get into an illiquid stock, probably, where options get liquid only when there is strong momentum, something like you can say an India Mart or a Dabur, these stocks would see an options participation when there is momentum, but later it fades out. So only participate in options in contracts where there is ample liquidity. Again, I repeat that there should be good volumes in strikes, 5 strikes from at the money plus minus. So that will give you an ample opportunity to place your trade safely, execute your trade safely, and get the best rates which you look forward to.
Well, Akshay, point taken. Thank you so much. A happy Dhanteras to you as well, and season's greetings. And then, of course, thanks for giving us those strategies to work around with. But if you as a viewer are interested in placing a position in the options market or the futures market for that matter, and if you do want to take it up as a query with one of our experts, don't forget to write to us on WhatsApp on the number that's being flashed for you on your screen, and we will be sure to take it up in the F&O show, which will play out at 10:30 today. With that, it's back to you all.
Thank you, Agam. Yes, we will be taking up all your queries at 10:30, as we always do. A quick check on the implied Nifty this morning. It's expected to see a flat start this morning after a big up move that we saw in trade yesterday. Well, follow-up buying is what's going to be important, and of course, a close at higher levels is what the bulls would like. But of course, all eyes will remain on gold. Remember, gold futures have actually eased in the global marketplace, but it is Dhanteras, so if you're looking to go out and buy your gold sicker, you must do it irrespective of where gold is headed. Well, we now have Rajat Bose, SEBI registered research analyst, joining in with his technical view on the markets. Rajat, it is Dhanteras, and I'd like to start by asking you, what are the charts on gold looking like?
The gold and silver are both looking pretty good. I would say that among them, silver looks even better. In fact, I would suggest that anybody looking to buy precious metals should concentrate more on silver than on gold, but both are quite bullish. In fact, I'm expecting gold to ultimately go to something like 84,000 by about, say, next Dhanteras. That is the bare minimum projection. It could even go further up. And regarding silver, I would say that 108,000 to about 110,000 is the projection for silver, and it could even go up to 112,000 to about 114,000 by the next Dhanteras. So these two are bullish, but silver is slightly in a better shape.
I think we've just lost Rajat, but nevertheless, let's get in Sunny Agarwal in this conversation as well. Sunny, good having you. Thanks so much for joining in. Sunny, just looking at the spate of numbers that have come out post-market hours yesterday, or even during market hours yesterday, after a while I saw some of the numbers looking like showing some margin expansion that's been missing this quarter per se. Let's start with talking about the Bharti twins. What did you make of the numbers, Sunny? And of course, to you and yours, Sunny, at the outset, a very happy Dhanteras.
Good morning and happy Dhanteras to everyone. I think definitely a good set of results from Bharti and Bharti Hexacom, both, especially the way ARPU has increased 10% Q on Q at 233 rupees. I think it's pretty heartening to see a very good increase in ARPU. Again, that was on the expected line because all the telecom players have taken price hike during the last quarter. So I think it is still 2 quarters away for anniversation of this increase in price hike. At the same time, drop in subscriber base was relatively muted for Bharti as compared to the Jio. So I think again there Bharti has beaten hands down the Jio Telecom. So I think a pretty good set of number, and Bharti Hexacom has particularly delivered a better set of number as compared to Bharti Airtel. And again, the reason remains the same, that Rajasthan and Northeastern belts are relatively underpenetrated, low ARPU market, where the scope of expansion in terms of ARPU as well as the subscriber base is slightly higher as compared to console Bharti numbers. So I think again, Bharti Hexacom we have recommended also in our Diwali pick, and we continue to remain bullish on Telecom as a growth story. And again, the top pick continue to be Bharti and Bharti Hexacom there.
Okay, I don't know if Rajat is back. Rajat, can you hear us?
I can't hear the program audio.
Okay, we'll try and get Rajat back in a bit. Sunny, you talked about Bharti Airtel. That looks positive. Sun Pharma also some positive cues today. But do you think, I think the primary question is, do you think that it's now time to start nibbling away after the kind of fall that we've seen? Do you think today could be a day when you miss the boat if you sit on the sidelines? And if yes, so what is on your radar?
Yeah, definitely. I think we have already seen a decent correction in the many large cap names post this during the month of October, and I think it's time to start nibbling in the market. But again, the investment horizon has to be slightly longer at a current juncture. So starting with, if you ask me where I would like to bet my money on, so starting with the BFSI pack, I think so few set of companies which have reported good numbers are basically ICICI Bank, MCX, Nuvama, again a play on wealth management. Within private banking side, Axis Bank and HDFC Bank look good. Bank of Baroda, again a decent set of number from PSU side. Indian Bank has reported a decent set of number. From a mutual fund side, NAM India has reported a very good set of number. In fact, all the AMC players have reported a decent set of number. On NBFC side, SBFC, which is a very smaller size, ticket size SME focus NBFC has reported good set of number. On again on transaction processing side, CDSL. On housing side, PNB Housing, REC on power finance side. So these are a few companies which we like post results in during this September quarter. From ITES, I think a few outstanding companies have been Persistent, FirstSource, Coforge, Just Dial, and Infobeam. Again, Infobeam is a micro cap company. From a consumption side, a few names which I liked are basically Bikaji, Adani Wilmar. We have seen a very good recovery as far as edible oil segment is concerned. Chalet Hotel has reported very good set of number. Again, Bharti Hexacom we have discussed already. On cap good side, I think the railway wagon companies have reported very good set of numbers. So companies like Texmaco, Titagad, within defense, BEL has reported very good set of number. Anup Engineering, again a small company, reported decent set of number. From chemical, agrochemical, Sumitomo and Sharda Cropchem has reported very good set of number. Cement overall has been a weaker sector throughout the quarter. But again, I feel the bottom is in place for cement, and one can dabble in a few large names like Ambuja, Dalmia Bharat, and JK Cement. And on a smaller side, we feel Star Cement yet to report the number, but again a play on Northeastern belt. On auto end side, I think Olectra has reported a very good set of numbers, so that can be on radar. Although auto OEM we are seeing a slowdown, but it's a good opportunity to add on to a few names like M&M and TVS Motor. From auto and RK Forge and SGS Enterprises again reported good set of number. From pharma, healthcare, Thyrocare, Rainbow Child Hospital, Sun Pharma, Supriya, Polymedicure,
Sunny, allow us. There's just so many stocks that you mentioned in terms of good results that we'll get confused. So just allow us. We'll come back and talk about pharmaceuticals in a bit. But it's interesting that some of the names that he's spoken about in a bad quarter, some of the good numbers, Samina and Tamanna. So certainly viewers should take note of some of these.
Yeah, and even auto, he does believe that despite the correction or because of the correction, auto becomes a good space. But yeah, Sunny, we'll come back to you and add to the list of stocks that our viewers can buy. But while we talk about today, Rajat, how are you feeling about the markets? Yesterday's recovery, you feel is sustainable? Would that mean you'll go long on the Nifty or Bank Nifty, and also any stock ideas for the day on the long or short side, I guess?
Sure. What I would like to say is this, that this is the market is likely to move up in the short term, and it can move up to something like 24,900 to about 25,000. but take it, this is just a pullback rally, or not very unpalatable to project it as a suckers rally. Anybody thinking that the uptrend is going to resume, which is not going to be the case, because there is sharp 20-day, 50-day moving average bearish crossover. That is, when that happens, you get this kind of pullback rallies, and after that it resumes again. And the next time when it resumes, this current low will also be breached, and 23,500 could also be tested. Now, this is the scenario more or less even in other stocks. And regarding Bank Nifty is not looking great at all. I would say that Nifty you can go long, but not so much in Bank Nifty. But there are stocks that you can actually buy. One is HCL Tech. It has got maximum momentum. Buy it with a stop loss of 1848. And target should be 1892 and 1910. And the other stock that I would like to recommend is IRCTC. IRCTC stop loss should be 808. Again, 829, 841, and 849. These are the targets. HCL Tech, one can continue holding it, but IRCTC, book profits and get out whenever that opportunity comes. As I said, that I'm not trusting this rally. This will be a short-lived rally.
Okay, so a lot of calls there. What's on Profits watch list though? Let's go through some of those stocks that could buzz today, some with good news, some with not so much. But definitely on the positive watch list is Airtel. Margins and PAT have beaten estimates. Card trade is one to watch, and it's a top brokerage call of the morning as well. Nomura has sees a 23% upside. Bharti Hexa margins have risen, and Q2 beats estimates as well.
Right, you also have Federal Bank. No concerns on credit costs. That's being viewed as a positive. The stock should see a positive reaction. Well, sales, margins, profitability see an uptick. On Gillette, the counter will see a positive reaction. And Sun Pharma, the commentary coming in from the management is constructive about the second half of the year, and that will give a boost to the counter.
On the not so good news kind of a day, Spandana Spurti, losses in Q2 because of a 500 crore provisioning, might see a bit of impact there. For Suzlon, order book is looking decent, but Q2 has missed expectations, and Tata Tech also a bit of a muted second quarter. Citi has maintained a sell. So those are some on our watch list. In fact, Sunny, I wanted to talk to you about, let's just add some more perspective on the BFSI pack, and Federal Bank also had its numbers out today. Do you think that the kind of, in some quarters, the mood change or shift that we saw in BFSI sustains today, and anything that you're liking there specifically?
Yeah, I think again within BFSI, I think the street will start focusing on the names which have reported decent set of number with a good guidance. So, like Federal Bank yesterday gave a guidance of close to 18% advanced growth for full year FY25, and have reported decent set of number. I mean, no complaint across the parameter. We have seen improvement for Federal Bank. And again, same is the case with the ICICI Bank also, which has reported a very good set of number, no complaints over there. I think ultimately the pain is in the microfinance pocket and unsecured book, where we have seen some deterioration in the asset quality. So I think in terms of valuation, again, I think PSU banks continue to trade at an decent valuation compared to their large cap peers. So I think street will chase those names which where the asset quality is at least still pristine as compared to the other players. So I think few names like ICICI, Federal on the banking side, on NBFC side, I think PNB Housing has reported decent set of number. SBFC Finance has reported decent set of number. HDFC Bank and Axis Bank again offers a lot of comfort on the valuation front. So these are the few names which I would like to go ahead with.
This is definitely a positive. The big numbers actually that we need to focus on, the twins, telecom majors, Bharti Airtel as well as Bharti Hexacom. Rucha, what is the detailing on this? On the face of it, looks like a pretty decent set of numbers.
Yes, so Bharti Airtel and Bharti Hexacom both have reported very healthy numbers. Talking about Bharti Airtel first, revenue is up about 8%. Margin came in at 52.7% versus 51.2% in the last quarter. Net profit contained an exceptional item because of which the profits were down 12%. But the real picture is to look at it without the exceptional items. And when we look at that picture, well, the net profit seems to be up around 25%. All of this on a quarter-on-quarter basis. The major highlight over here is the ARPU, that is average revenue per user, which increased by 10% quarter-on-quarter to 233 rupees versus 211 rupees last quarter. Now remember that the management had targeted rupees 300 as an ARPU. So clear set of numbers that seems to be achieving that kind of target. Well, talking about the customer base was down at 406 million versus 409 million last quarter. So a little bit of disappointment over here, but capital expenditure in line around 77 billion this time versus around 80 billion last time. Net debt to EBITDA largely remained the same at 2.5 as it was last quarter. Talking about Bharti Hexacom, well, another good set of numbers over here. Revenue was up 10%. Margin came in at 47.8 versus 45.8 last quarter. Net profit excluding the exceptional items over here also was up around 31%. ARPU over here came in at about 228 versus 205 in the first quarter. So real good jump in kind of ARPU is what we can see over here. Lastly, the total customer base was down 2% quarter-on-quarter at around 27 million versus 27.92 million in the last quarter. So overall, decent set of numbers and healthy ARPU as well is what we could see over here.
Okay, so that's the view on Bharti Hexa as well as Bharti Airtel. Decent set of numbers on both, but we are doing ground checks as we get into festive season, and auto is one sector which is really in focus. Have consumers renewed their interest in passenger vehicles? Are we seeing those kind of sales come in as we get in the Dhanteras mode? We've caught up with Executive Director of Landmark Cars on the latest trends and how the festive demand has influenced their numbers. Take a look.
I think this period, the festive period that we are seeing right now, I think it is quite good broadly. I think we are seeing a good purchasing from the customers across the auto segments. And from the Vahan numbers, which we have been tracking very closely, I think the numbers are seeing very positive, and we are prima facie looking at a 5-6% growth over last year's festive period. So I think we should be anywhere close to 400,000 cars for this month is what the trend right now is looking like. For Landmark, we now operate 10 brands across 11 states in the country. And because our focus is mainly on the premium and luxury car market. And as you know, in the last few years, the Indian consumer has now moved more towards the premium side of the auto buying as well. And that is what we continue to see in this festive period, where the customers who are even coming are preferring to buy the higher end or the fully loaded variants of most of the models which are there. The festive season, we are also seeing, because there is an increased availability that has been there by many of the manufacturers. Many manufacturers have also rolled out some customer offers to make it attractive. And at the same time, there is also, as you said, a pent-up demand because the planned purchases around this auspicious period are there. So I think all put together, I think we are in for a good Diwali period this year.
last hit of pre-open rates look good. We'll wait for those to settle. But remember, we are thick in the middle of the festive season. And while we're celebrating here at the NDTV Profit Studios, we have some very special guests who have joined us today. Niraj, CEO of Institutional Equities, MK Global Financial Services with us. So is Manish Sonthalia, Chief Investment Officer, MK Investment Managers. Great to have you guys in the studio. Thank you so much for coming in.
Thank you. Thank you for having us here.
On an auspicious day, I must say. So superb that you could join the party. Is the mood a little damp this time, Nirav?
Well, if you look at the earnings, there have been some pullback in earnings and all. After almost, 25% returns on the Nifty, 35% returns on the mid-cap, small-cap index, and stocks are up 100%. If they pull back 15-20%, I'm not too worried. So we had a great post-pandemic, recovery in the economy, recovery in the markets, recovery in the profits, and capital productivity. The part of the game. But if you look at the next 3, 4, 5 years, I can't be more bullish.
Can't be more bullish. That's an interesting comment. You echo that view, Manish?
So, Nirav,
and sorry, the part 2 of the question is, Nirav is saying I'm okay with 15-20% correction. 5% mein people are really feeling scared. 15-20 is a slightly difficult one to digest.
And 5 years आप बोल रहे हैं, उतनी patience कहाँ है लोगों को?
But I'm saying if you don't have a mental construct to be in the markets for next 3 or 5 years, if you can't see a 20-30% drawdown, I don't know how else to make money in the market, no? So
there's no free lunch. You can't have high returns and low risk, right?
It's not possible.
Okay, but Manish, yeah.
So, Nirav, just looking at this quarter's earnings, you do some loud thinking as to what is happening, because this quarter consumption is really weak. You have the finance minister also alluding to the fact that the purchasing power of the consumer is weak. Now, go back to 2020. Okay, between 2020 and 2024, what exactly happened? Government gave out stimulus. You had a whole lot of fiscal deficit that was rolled into. What did that do? Then actually this fiscal deficit, propelled the capital markets, the real estate market. You had leveraged households piling on to consumption, discretionary, your autos, etc. That went up. You had government spend a lot of infrastructure, government companies did very well, so on and so forth. This is what happened between 2020 and 2024. What is happening now? The current budget says that FRBM will be followed, which means that the budget deficit or the fiscal deficit needs to come down. I think that is the pain that is getting felt. That the household leverage, which was playing out between 2020 and 2024, the household leverage is no longer available. And the government is in no mood to give largesse, like the Manregas of the world, or fertilizer subsidy or food subsidy. They are doing what they can, but you'll also have to stick to the FRB. That is the pain what we are seeing today. That corporates, they have got corporate tax cut, their profits swelled. They were supposed to do capex. That has not happened. The government has done the heavy lifting. Private capex was supposed to happen because they were making huge amounts of profits. That didn't come through. Now, you again don't expect the corporates to do, because if all this while they have not done capex, is basically again the heavy lifting has to be done by the government only. And households, you saw urban consumption not doing well. Rural was some hope. That has also was struggling over the last few years. And if you have tier 2 banks, BFSI names come out as a surprise saying that these are the provisions that need to be made in the current quarter numbers, I don't think this lasts for only one quarter. It lasts for a few quarters, right? And from that point of view, the pain in the household is clearly getting felt. So we got some fabulous returns in the last 1 year. Maybe it's the time to consolidate.
Right.
It's the time to protect your gains rather than aim for the next 50%. If it comes through, it's a bonus. But these are the things which needs to come through, because the earnings growth is anemic.
How will you protect your gains?
Sector rotation. It is sector rotation. India has a whole lot of sectors today, 57 sectors. I have alluded to this before. The high beta, right? The capital goods, the railways, the defense, even some aspects of EMS, power, they will be vulnerable. Where do you hide? And I'm telling you, these are not selections, these are allocations. BFSI, very cheap. Pharma, defensive, Biosecure Act coming through. Technology, coming out of a low cycle into an up cycle because of rate cuts and so on. And these are index heavyweights. BFSI is, let's say, 30%, 14-15% on technology, so on and so forth. But, the problem is consumption. Anything to consumption, the government has to do something to lift the demand side of things. Demand side of things so that autos start to do well. Housing finance starts to do well. Where are we seeing? The cement demand is so sluggish. Home improvements are not happening.
I think barring BFSI, no other sector is impressed on the upside.
Yeah, technology a bit here and there.
It's a mixed bag, right?
But is there a difference between the buy side and the sell side?
Clearly, right? I think there's a consensus in the country, forget the studio, that from a 5-year time horizon, India is a great story.
Yeah.
You extend the time horizon, it looks even more constructive. But let's get down to what it is for the next 1 year. From 5 years, it's a buy the dip. From 1 year, is this sell the rally, consolidate, rebalance, or largely because better opportunities will happen between this somewhat and next somewhat?
So, first of all, consumption. So what you are looking at consumption, I completely agree. So there are pockets of slowdown. Now look at it this way. You're looking from the lens of what you see in reported listed entities, right? Now let me turn and twist and say that, look at Blinkit. What is the GMV? 25,000 crores, right? And you got Instamart, that is another 20,000 crores. 45,000 crores of revenues has been generated in top 20 cities in the last 3 years, right? So someone is losing out, right? Whether it's DMart or whether it's going to be Hindustan Lever, because then...
All the Kirana stores also.
All the Kirana stores.
So it's coming at the cost of someone.
So I think in India, I've said this again, we don't have too much of statistical data, but I'm saying from my perspective, if I look at the PMI figures, right, which is, let's say, which are non-government figures, we are talking about HSBC PMI figures, 57, 58, right?
57.7 is what
right. So we are rocking, right? If I look at very, very aggregate numbers.
This is almost a bull and bear from MK, right?
Which is great, a buy side, sell side difference. And that's cool.
That's exactly what we wanted.
Right. So GST numbers are rising at about in line with, your nominal figures after having a buoyancy of more than 1 over the last 3 years, which is also very fine. Autos, we are seeing a slowdown, but that has to be the case. You are selling 4.5 million cars. US does about 12 million cars.
So, very pointed question. Did you buy this dip that happened last week? Yes or no?
I am fully committed today. So, that is the question.
You're fully
100%,
invested?
100% of my net worth.
Manish, what about you?
So, we have a principle generally not to keep cash because human beings
Personal portfolio, chalo, tell us that.
No, even there it's fully invested. You do a rotation trade.
Yeah.
Protect your gains in the names which you have made.
And get out of that and reallocate, rebalance.
And rebalance your portfolio into defensives currently. Watch out what the regulators are going to do because RBI has clearly said we are not going to, alluded to the fact we are not going to cut rates before the first quarter.
They
need to prepone that. If you need to give some sort of an impetus on the demand side.
But Manish, I don't agree with you. A monetary policy move will only do this much for demand. If you were saying the problem is demand, I think we need a fiscal push.
Yeah,
which we don't have the ability to do at this stage.
We do, but it's not the government's. That's not the government's policy push to dole out.
But the FRBM has been reinstated that you are going to reduce the deficit.
So it's difficult to give the push. We don't have the room to do that.
But look at what is happening on the demand side in terms of consumption.
Do you think a rate cut will push consumption? Do you think
it
urban
will
India
help
will
at
buy
the margin?
more?
Yeah.
But a current account deficit increase or a fiscal deficit increase will do the trick.
Okay, guess who's joining the argumentative Indians on the table?
Where is he sitting?
Let him be the judge out here. But I just want to mark, just before we get to Mr. Karwa, pre-open rates have settled down and it's a very flat start that we have for ourselves. Banks maybe slightly higher, but aside of that, we don't see too much out there. In fact, even the mid caps and the small caps, at least on open on the face of it, seem to be just around meandering along. So specific stocks which might on results might do well, but be that not. And by the way, Spandana Spurti is starting off really lower.
But terrible numbers, 40% lower, and every parameter.
I think it's all about the numbers. Look at Gillette, fantastic. Federal Bank, Suzlon, Kalpataru. So even Tamil Nadu Mercantile Bank, So where the numbers are good, the street is definitely rewarding
for now. But Mr. Karwa, good having you as well. MK Think Tank here. We have a difference between the buy side and the sell side here. Not really a difference, but kind of maybe
time
a cautious move.
Different.
Yeah, time horizons, but cautious view versus a slightly constructive view. Where are you here? This somewhat. Are you a buyer? Are you a cautious buyer?
See, I'm an eternal optimist.
So you're a Nirav's camp, huh? Good, you're sitting also in the
I'm an eternal optimist. First of all, thank you for inviting and happy Dhanteras and happy Diwali to all the viewers. So I think, as you said, the last cue, that time horizon, I think that is what is important. And maybe you are careful, cautious in the short term because of whatever extraordinary returns that investors have seen on the markets in the last 2-3 years. So mean reversion is this thing. And yes, valuations. So if I remember a few months ago in August, I was on this same platform.
The conference time.
And I was careful or cautious about the valuations, and it is playing out in many stocks. So coming back to short term, yes, you could be muted returns, but the basic story remains as strong as it ever was about the domestic economy or the opportunities, etc., etc. So valuations you have to always be very careful about. This time around in the short term, maybe what we were seeing a huge amount of liquidity which was there, but now it is getting absorbed, A, by the various IPOs, etc., and B, by the massive FPI selling. So short term, yes, you could have issues or rather muted returns. Earnings are not supportive. I think that is something which is a cause for concern. But from a longer term perspective, we are always bullish, and there is no reason not to be bullish upon.
On the IPOs, since you mentioned the IPOs, NTPC Green now we know will come. Everyone's talking about Swiggy. You've had a sort of a mixed bag on the response for the IPOs recently. Have you also tempered your view towards the primary markets? More, I think, time to be more selective?
See, I think even corporates are very smart. Yes, some corporates have overpriced themselves, and we are possibly seeing the impact of that in the listing and post-listing of one of the larger IPOs. But what I believe is that one of the other IPOs which is expected to come in the next few weeks, they have reduced their valuations also.
Swiggy.
So they are leaving money on the table for investors. And that's the right thing to do, that if you have decided to go public and you're all there, then looking at the sentiment, it's very important that you temper the valuations and you leave money on the table, because at the end of the day, it's about if investors don't make money, then it's not a very fair way of going about it. So my sense is corporates are equally smart as much as you can say the retail investors who are very smart in the recent auto IPO.
Yeah, most certainly. Okay, now just stay on, gentlemen. We'll continue our conversation with just 2 minutes left. Rajat Bose, one quick word from you. You've seen the pre-open rates. Is there something that you would want to trade? What would be your top trade this morning?
As I said that HCL Tech had the best of momentum. So HCL Tech could be traded as well as IRCTC. Those two I have chosen. And among the current this pre-open rates, I would say that as I see, not much. I would say that maybe you can look at LTTS, which is up by 14.50, currently ruling at 5164. If it manages to get past 5175, then 5209 would be the next target. Caveat has it that I personally hold some shares in that stock. Apart from that, even Apollo Hospital, again, I have to give the same disclosure that I personally hold some shares there. Here, you put a stop loss below 69.40, and if it manages to get past, say, 69.85, then 2,000 levels would also be bridged.
Got it. Okay. Rajat, Sunny, both of you, thank you so much for taking the time out and being with us today. And to you and yours, happy Dhanteras. But the market's kick-starting trade this morning and looks like a flattish start. So no big moves except for specific stocks on which there would be either result-led moves or otherwise. So here's the screen. And the bank Nifty's about 1/3% higher. So that's spurting higher. I wonder what's correcting. Let's just quickly bring the mid-cap and the small-cap indices. I would reckon they would be starting off flattish. Maybe crude sensitives are higher, so watch out for them. Mid-cap's about 0.25%, small-cap's about 0.25% as well. Get the heat map up on the screen, Nifty 50, and just see what's moving. So you have some gains for NTPC. ICICI Bank continuing from where it left off yesterday. So up 1%. Now you know why the bank Nifty is active. Reddy's, Bharat Electronics on that Morgan Stanley note, Grasim, Apollo Hospitals are amongst the gainers. From the losers, Infy's correcting, down about 1.5%. Yesterday's top mover, Shriram Finance, is down. M&M corrects after yesterday's up move. Reliance is flattish to marginally lower. And Kotak Bank and some of the metal names are pulling back. So that's the long and short of it. Nothing too dramatic on the index. NTPC is the big mover on the upside, and Infy is the big drag.
NTPC, I suppose, because of the shareholder quota sort of excitement on NTPC Green, though it's already run up on that a fair bit. On the broader markets, let's just quickly pull up what the broader markets are doing, and not half bad. Even Stevens really completely flat on the mid cap and the small cap index as well. Nothing great happening there either, but very, very focused on results and the reaction to how the numbers have been. So look at Gillette, for example, the big winner this morning, 11% up. Sirma SGS, second good day. Again, numbers impact. A Federal Bank, JSW Infra, Kalpataru, and the list goes on. So IGL actually switched around from the pre-open session, but IGL also reacting to numbers. On the downside, though, you have fair bit of pressure coming in terms of profit booking. And I just want to pull up and see what's happening to a Vodafone this morning, since Vodafone was one of the winners yesterday. You're seeing some pressure in Vodafone as well. So largely, I would say numbers-related moves a bit muted, and the red deepening on the Nifty IT. So IT stocks also taking a bit of a tumble. I think BFSI also not holding up compared to yesterday, but Nifty IT hit sharper. Yeah. Maybe bond deals are changing the mood there.
It's a quiet day of trade. I don't think we should be getting too excited or too disappointed. It comes in after a pretty sharp up move, but what's important is follower buying that we need to see in today's trade. Manish, you were talking about sector rotation and defensive. Now, for an investor, this becomes a little bit of a difficult journey, right? But because you talked about defensive, and defensive in the true nature of its sense is companies in the consumption pack, for example, sectors such as pharma, sectors such as IT. Now, consumption has been the biggest disappointment this quarter, right? So how do you define defensive? And also in that same breath, when we talk about rebalancing, I think the idea is take profits off the table in the broader market funds and rebalance it to the large cap space. Do you agree with me on that too? So sectorally and market cap wise.
So everything is relative in today's context. You are trying to relatively outperform what the market is going to do. Yeah. So where is the earnings comfort? It's basically in BFSI. Even this quarter, the best performance has been
only BFSI.
There. Yeah, the large cap BFSI, and even the PSU banks are doing relatively much better in terms of earnings. IT has been a decent quarter. Okay, you expected double-digit growth, but it has come in at single-digit growth on a broad basis. And obviously, you're coming out of a rate cut. The cycle, the low cycle again is. Pharma again is going to not disappoint in terms of numbers, but so there is where you actually go all out in terms of protecting your relative outperformance. Again, one more sector.
You buy.
Yeah, you buy.
Okay.
Or you sell something.
Yeah.
And one more sector which has really done well this quarter is your capital market entity.
Of course, yeah.
And these sectors have not seen a re-rating in terms of multiples. And this is here to stay.
But if the markets turn volatile, sentiment takes a little bit of a dip over the next year or two, you will see those companies get impacted, because I know while their income is sticky for most, but the minute we start seeing advisory income easing off, because once you're concerned, right, and then things just don't work out for you. Capital market performance is a function of what the markets have done.
No, basically it's basically a sector getting re-rated based on what the medium-term outlook on that sector is.
Beyond this 1 year.
So it's not about the markets going up and down. It's basically what are you platformizing in terms of your entity. So, you have exchanges or duopoly, RTAs which are duopolies, you have depositories which are duopolies, you have broking platforms which is now non-linear because everything is tech-enabled. Of course, markets will go up and down. You will have the SEBI regulations come through and so on and so forth. But the number of demat accounts, the number of online trading accounts today are minuscule compared to what the number of PAN accounts are today. The number of PAN accounts are more like 50 crores and above. We have just 5-6 crores of trading accounts. I mean, that's going to change. Maybe this is one, and fantabulous ROEs on these companies, more than 20, 30. How can you have these companies trading at 20p, 25p? I mean, you've got to think slightly long term.
Before we go to Nirav, then let's ask the businessman here, right? He's running a financial services firm in the capital markets link space. We've tried to think about this and ask people, what is the kind of earnings curve or trajectory that you foresee? I'm not asking you to get prediction in your business, but what's the kind of turn that you foresee over the next 3-5 years?
I think all of us need to, what Manish said was exactly on the ball, that the mindset of investors for this part of the business was that it is a very cyclical business, deep cyclical, and the impact on profitability used to be very high. The operating leverage used to be very high. But now the sheer size of the business itself, the whole opportunity has become so big, and also the business has got concentrated with limited entities. So the impact of any dip in volumes or volatility will not be so high as it used to be earlier. All capital market entities, if you look at the brokerages, the wealth management firms, the asset management firms, many of them are all housed under one entity. So the businesses have become much more stable, the revenue streams have become much more stable. So I think the valuation multiples will expand. It's a question of time before investors realize that this is a sector which is growing very fast. And as far as your question is concerned about the growth, my sense is that anywhere between a 20 to 25% kind of growth in revenues for these kind of businesses for the next 5 years, don't count me on every year, but on a broader CAGR basis is a given. It's just a given. The businesses have become very, very robust. Regulators have also ensured that the businesses are very safe. So the certainty of earnings for all entities in this ecosystem is very, very high.
So the kind of squeeze on F&O volumes, and we'll see that in a graded way, not a dampener to sentiment?
These are things which will take a quarter and two and get adjusted.
Okay.
That is what it is. We have seen so many regulations over the last 25 years.
You see volumes moving then? Because
there will be some impact if people will get used to the new way of business, etc. Or you have only one weekly expiry kind of a thing coming in, all those things. Those adjustments will happen. But those adjustments will, within a quarter or two, you will see that it's all history. Because if people want to trade, they will want to trade. Now, whether you give them a weekly...
Unless you open a casino.
No, I don't think so. That casino, and I think it's a very, very unfair argument to compare broking
gambling versus trading.
Casinos. Yeah. I think it's a very unfair argument. So I would not get into that kind of a thing. My sense is that, people want to trade, people believe that they can make money. And there are success stories, and yes, there are data which is saying that 90% of the people don't make money. But I think there's a reason behind that.
Right.
If you don't do your homework, who is to be blamed?
Yourself.
Absolutely.
Yeah.
So that is what
Nirav, why don't you come in on this, right? We've talked about, you seem like you're an eternal bull, which is great, and that's what you want to hear on a day like today, right? Tell me, we've talked about BFSI extensively. Earnings have been good, but we also understand with financialization of assets and capital market players picking up, this is going to come at the cost of banks. Asset quality is a concern, but still this is a relative outperformers compared to the others. Manish alluded to there being 57 sectors. Give us ideas, give us spaces where you feel like there is value, earnings have impressed, where the growth potentially could be non-linear. So stocks or sectors that one can buy and actually keep buying over the course of every decline and hold for the next 3 to 4 years.
Well, I'll just add. So, just wanted to add to what KK said. When you look at something like capital market advisories now, and you talk about the impact of the option volumes and all. So, now if you look at 5, 10, 15, 20 year volume CAGR, volumes, right? That is about 13%. 20 years back, your commissions are about 2%. Today, I'm working at a yield of 7 bips, right? So I cannot have any more pull down on my revenue growth because of any further compression in yields, right? Likewise for his business, I'm assuming that you are at 2%. Now I think you're charging at about 50 bips or 60 bips, right? And we are talking about scale. I mean, please understand and appreciate that in a country like India with 1.4 billion and with savings about 200 billion, $300 billion, it's a massive market, right? At some other time in 30, 40 years will be larger than what US is around. So this is going to be a massive opportunity. Think of it, how many guys are there in this space? How many foreign guys have come in and said that, you want to tap the savings pool in a country as large as India, right? So these are phenomenal opportunities, and it is exactly like Indigo, right? People at some point are worried about the fact that you're looking at quarter on quarter. You completely understand, don't appreciate the fact that, there is massive ROE, right? Yeah. And you see what has happened. And, you got some big supply getting absorbed in those kind of sectors. So, let me add, again, so look at something like renewables. For all of us, we've all been grounded looking at Warren Buffett and looking at these success stories, and it's very easy for us to get very, very value conscious, which I completely understand and appreciate. But big opportunities are also made when you can price the growth, right? Today, for example, and we met n number of promoters are putting in billions of dollars in something like renewables. It is an all-in bet on on government regulations. Right, the fact that you've got an X level of custom duty support, anti-dumping duty support, and look at the numbers, for whether it is going to be premier energies or stuff like that. And this is not something that you can think is going to happen for next 2 or 3 years, right? You have to assume that, renewable is a 5, 10, 15, 20 year story.
What's your favorite in that space?
Well, I'll not get into stock specific because I'm not accurate. I'm just giving you a macro perspective, right? So I'm saying there is a second level of detailing that you need to do. Yeah. All I'm saying something like Dixon, for example, right? Look at the blowout numbers, right? You are growing at 80-90%. Now, obviously, it is not very easy for you to say that I'm willing to buy something at 80p. But just because you want a great story cheap, you're not going to get it cheap, is the point I'm trying to make.
So, okay, great stories are going to come at a cost. I just want to now narrow focus to say a week from now. Manish, I'll come to you on this. November's looking very exciting. Many things happening. You have, the election in the US. You will have the next Fed meet. A whole host of events which will come in. Do you see the mood changing dramatically one way or the other first week of November? Brace for impact, good or bad?
Look, I think the FIs are in no mood to stop selling India.
To stop selling India?
Yeah.
Okay,
they are in no mood, whether you call it a China rebalancing or whatever. They are in no mood to sell India, no mood to stop selling India. The key thing to watch out for is the SIP flows that are going to be there before everybody in the first week of November. If you have a support coming in out there, and in that also the composition, whether mid caps, small caps are getting a larger share of allocation as opposed to the large caps, you jolly well believe that India will get support at decline. But given the fact that we have seen a 7-8% cut on the Nifty and the mid and small caps would have fallen more, has the retail investor got shaken? Yes. If that happens, the back of the market will crack.
So SIP wale par bharosa hai.
Ekdam. That is the lifeline for India because everything else is today on the negative side. You will have, let's say, geopolitical issues. You have a China again coming out with a stimulus announcement on 3rd November or 4th November, something like that. You have a president election in the US. You know who is going to be favorable to India or not favorable to India.
Are you sure? I mean,
no, I'm not sure about anything.
Who's favorable? I mean, Trump is really. I can't tell.
Yeah, you don't know, but
very close.
Yeah, it's quite close. But you'll have policy impact. Yeah. Either of them gets so that is one. So I think it's all about the flows, and you see what the government has to do, given the state of affairs currently, given that we are looking at a stressed household sector, that needs to be taken care of. Sure. Yeah, you need to have good announcements as far as spending is concerned. The real economy. Today, everybody is focused on the financial side of the economy. One has to really focus on the real side of the economy.
And it's tough right now. I mean, and the anticipation is that the next 1 year off camera, everyone tells you that the next 1 year is looking tough, even when you're running a business,
again,
right?
Just reiterating the fact that it's advisable to really protect the gains that you have made in the last 1 year. Yeah. Rather than aim for the next 50%,
Just one quick, sorry, you want to go first?
Please,
I just want to quickly get some perspective. This year belonged to the PSU pack. everything from defensive to railways to fertilizers enjoyed their rally, and we justified it with order wins, government, election. Do you feel like for the foreseeable future, while these are the pillars of India's growth story, may not be able to generate significant wealth for the next couple of years?
No, I think you can't generalize the PSUs. There are PSUs which are extremely, cheap and would have very decent growth. In the case of PSU banks, they would be trading at half the valuations of private sector banks in general. And, the numbers seem to be better than the private sector banks, at least this quarter.
Yeah.
So that's one. Monopolistic companies, oil marketing companies, 5-6% dividend yield stocks. What are we saying?
Yeah. In fact, that was going to be my question. So I have two more questions. That's very quickly we'll make it. Nirav had written a wrote, oily moily. I remember that conversation very well. I'm just thinking, Nirav, oil, such a big positive, 4-5 big instances of either geopolitical stress or otherwise, it refuses to budge and go above 80 in most cases, right? How big a positive is that? While we're talking about all the negatives.
That is as good as, monetary stimulation.
Yeah.
There is no doubt about it.
Right.
And which was coming to that, which is why I am not a great believer of trying to take very short-term tactical calls, because you may focus on earnings and suddenly you will have big earning boost because oil is going down, which is not in your control. Or you have to preempt the policies, right? For example, I see no reason why the government RBI should not be cutting the rates now, right? This is unheard that, you got Fed cutting the rates and you got the audacity, which is very good. That tells me the strength of the Indian economy, that you said that I'm going to hold my own fortress. And see how rupee has behaved, right? Despite the fact that my DX were rallied 4% in month of October. And we've seen a 10 billion outflow.
The invisible hand in the currency markets, right? So it's going to behave.
100%, but you should have wherewithal to buy, no?
About crude, and I know Niraj.
I have a question with Mr. Kara.
I just want to do a follow-up on this.
Yeah.
What about other raw material costs? Commodity prices are on a general uptick, so while crude is capped, margins for most companies are impacted because of imported inflation.
But as a nation, crude price is lower is great news.
And gold,
they have to pass
gold
it
higher
on.
is an offset in my opinion.
They have to pass it on. Excise duties have to be cut on the pump. If the pump prices have to get lower. But
so that is very likely now. I think that's very likely, because I think now you got a trajectory. Last part of that risk is out. You are assuming that now, at least from what it looks like, Israel-Iran seems to be settled.
I think we just want to break one story and then we come up for wrap-up comments. So allow us to do that. Important one coming in from our banking editor Vishwanath Nair. It's an NDTV profit exclusive. Sources are telling us Prem Vatsa, Emirates NBD are likely in final race for IDBI Bank. Vishy joins us with more details. Yes, Vishy.
Right, Tamanna. So we did report a little while ago about in July, if I'm not wrong, where we said that these bidders had received the RBI's nod or the fit and proper approval, and now it looks like they are the only two bidders left in the race. Kotak Mahindra Bank, which was part of this entire crew, has seemed to have dropped out now. What sources are telling us is that Prem Vatsa, while he already owns CSB Bank through Fairfax Financial, is looking at a way where he could create a special structure where IDBI Bank can be held in that structure, and then the merger between IDBI Bank and CSB, which is one of the requirements that are there as part of the RBI's approval, that can happen a little later. So initially try to turn around IDBI Bank under this special structure and then eventually merge the two banks that he controls. Emirates MBD, of course, they will have to create an Indian subsidiary to ensure that the purchase happens through that entity and that IDBI Bank remains an Indian-owned bank, even though the owner of the Emirates NBD remains a foreign player. These are important moves primarily because what we understand from sources, what Shrimi Chaudhary, my colleague, had reported a few weeks ago, where she said that the government is looking to close this entire process in the next few months. Hopefully by March, the government is expecting financial bids. In the coming few weeks, these bidders will be allowed entry into the data room where they can do due diligence into IDBI Bank and then formulate their bids for the bank. That entire process is being set in motion. That's why it's important to know who exactly is in the race. And it seems it's Prem Vatsa as well as Emirates NBD who are fighting it out for IDBI Bank.
Sorry, on IDBI Bank, let's just pull up the intraday as well. So IDBI in focus. In fact, the BFSI pack in focus. And an interesting point here from Manish Sothale also said BFSI is looking exciting.
Because it's very cheap. And if you want to have growth of 6%, the credit growth in the system needs to pick up. Today, that credit growth is missing because the household is leveraged.
Yeah, fair point. Okay, so then because it's Samvat to Samvat, right? Very quickly before we wrap up, the big calls. Now, Mr. Kara, I'll start off with you. 2 years ago on this very platform, in the digital avatar, you told us that look at the capital market space. It may not work for the first 3 months, 6 months, but it's worked like a charm. Would love to understand from you, maybe for the next Samvat or maybe for the next 3 Samvats. What is your cornerstone call as a theme?
See, I think it is very important that one is the growth aspect and the second is the valuations. And today I believe that I think investing in banks probably is the best thing to do because valuations are very, very reasonable.
Private or PSU?
Private banks now.
Okay.
PSUs are
Frontline private banks?
Frontline private banks. I think that is the space to be in. They have gone through a lot of consolidation. They have underperformed the markets over the last 3-4 years. I think, and you have to anticipate what regulatory positives can come for this. For the last 12 to 18 months, the regulatory tightening has already happened. I think, and they were right also. But my sense is now that the regulators will ease things off for the banking system because if they don't do that, if credit growth is not there, our economy will not move forward the way we want it to move. So I would imagine that the regulators will also, so I am anticipating, I am hoping that there will be an easing of regulatory tightening which has happened in the whole system in the last 12 to 18 months and that should give a big fillip and plus valuations are in my favor from a next 2-year perspective. Because all the actual hard economies, I mean, whether it's defense or capital goods and all that, all those parts of the economy have played out
Old economy.
in terms of valuations. So I know the future, but it's all in the price. But here there is an opportunity for me to, for the next 12 to 18 months, 24 months, I think that should be my bigger call. And again, I'm only focusing on the domestic economy. I'm not looking at what's going to happen globally, etc.
So we've got banks, we've got capital markets. By the time we come to you, the list, the options that you can choose are going to be lesser. Nirav, barring these 2 sectors, your top sector to bet?
I'll just add one more, which is fintech. Super bullish on fintech.
Okay.
I'll also be very bullish on the utilities chain, right? So anything like in coal, transformers,
Little more detail would be useful, huh, Nirav? This macro theme is great, but no one's going to do all this homework.
I'm saying, I'm just telling you that
pay me for it.
your demand is
Free mein itna hi milega.
Yeah, your demand is growing at 7-8%. You can't set up the capacities in the same rate, right? So this is a 5-10 year story, and not many people want to invest in it, which is what I like, right? And I like industrials, right? But I'll create a long tail. So
it won't be core, it will be a little bit of your...
absolutely. Cognizant of the valuations, but then I'll still play that.
But I think what he added on fintech probably...
Fintech, but that PP Fintech is one of those stocks that you would probably... So on those lines, is that what you're thinking?
Anything can get listed. All I'm saying is that that part, that's the new thing, right? So I believe that in next 5 years, you can have a mega tech which can come out of that.
What about counters like, I know it's again a duopoly in some ways, Zomato, Swiggy. Is that a space QSR looks good
expensive,
to you?
but yeah, love it. So I think that the quick commerce space is made for India because you don't have organized retail in the country and the cost of delivery is so cheap, right? So guys coming on a cycle and guys coming on a scooty and some stuff like that. So $200 and your delivery is free. So I'm a consumer and I can sense it. So and I give the numbers, right? We're talking about GMVs of 25,000 crores in 2 years, demarked to 20 years to reach a turn of 50,000 crores.
And Zomato. Manish, what about you? You can't pick any of those.
So I think you can't miss out on pharmaceuticals. That has been a great performer. And with the Biosecure Act coming through, as soon as the president of US gets elected, he will put a stamp and signature on that Biosecure Act and it becomes a law. You'll have a plethora of opportunities.
He or she?
I mean, that is for... Okay, he or she. So, yeah.
So, check they whatever they check.
Yeah. So, I think, India's tap is going to open as far as the CDMO opportunity, the generic, biologic.
Yes.
And you name it. A whole lot of companies out here would actually, this sector should do quite well.
Gentlemen, thank you so much to you and yours.
Thank you so much.
Happy Dhanteras, happy Diwali.
Thank you
Thank
very
you.
much.
Appreciate it.
Happy Diwali to all.
Lovely talking to you. Okay, on to more conversations. This is the MK think tank view, of course, keep in mind. But let's talk about something else as well, PNB. Let's cut across to a conversation with the management post the numbers.
You are very much right ki the profitability is on account of to the reduction in the provision. But there is a all-round performance in each and every segment. If you see the operating profit is also increased by 10%. Net interest income, even in the difficult time, it is more than 6% YOY also. Specific question ki where the recovery has come because the credit cost has reduced. So even the recovery has come from all the segment, whether from the small account, even the big amount, even the account from the NCLT also. So even as the focus area of the bank is the recovery. And there is a containment in the slippage also, because if the slippage will be more, so we are required to make the more provision for the fresh slippage also. I will give one data, Vishwanathji, from the last 51 months, which is from the July 22 till date. It is a 50-month data. We have sanctioned around 9 trillion loan and we have disbursed around 8.19 trillion. And outstanding in this new book is around 6.31 trillion, which is around 60% of my total loan book. Then NPA in the new book is the only 2,300, which is coming only 0.29%. So this is the reason slippage has contained, and recovery is the 2x or more than 2x also. When the recovery is more than the slippage, it means there is a very less requirement for the credit cost. If you see the credit cost, it was 0.32 in the June quarter and it has reduced to 0.08. So we are revising our guidance 0.52. It will be for whole of the year 0.25 to 0.30 because we are having still around 1.40 trillion NPA book to be recovered in the times to come.
Got it. I wanted to also talk about the operational performance. Now, of course, you've seen deposit growth and loan growth still below where the rest of the market is. I wanted to get your sense as to, do you intend to meet the market rates by the end of this financial year, or do you think this 11-12% is good enough for PNB?
As far as credit growth is concerned, we have given the guidance around 11 to 12% and we are maintaining same guidance. Even if you see the last quarter, it was 12.80%. Focus area of the bank is the RAM, retail, agri and the MSME. Retail mein growth is more than 14% and RAM mein it is 12%. Retail mein the housing loan growth is 19% and the vehicle is 25%, education loan 12%. So the focus area is the RAM, but because we are the large bank of the country, so if opportunity is available for the corporate finance, so we are also doing as on date around 1 trillion book is already sanctioned, which is corporate is yet to avail. Part of this in working capital, part is for the project financing.
Okay, 1 trillion you said has already in sanction.
Yeah.
Okay. Yeah. Where is this coming from? What kind of sectors, sir?
It is from the different sector. It is some of the road also, some of the solar and some of the NBFCs also, and some of the loan for the project, which disbursement depend on the implementation of their project.
Okay. Now coming to the deposit side of the story, I just wanted to get a sense from you. You reported about 11.5%, 11.3% of deposit growth year on year. Considering the environment that is there outside, which is a highly competitive environment, do you feel that for PNB you need to maybe fight harder on the interest rates?
I think interest rate reached on the peak. But as far as concern for the deposit, that is not for the Punjab National Bank, because we are having more than 10,000 branches. We are having more than 20 crore customers. And we have provided each and every branch tab for opening of the fresh account. Last year, we have opened around more than 1 crore account for the saving bank. And this first half also, we have already opened 60 lakhs account. After providing this tab, the process for the account opening has become very easy. Sometime earlier it was taking more than 3-4 days. Now instantly we can open. So our focus on the CASA doesn't mean that deposit is available market mein. We can raise the deposit, but that is at a very high cost. So we are giving the focus on the CASA, and in addition to that, we are having the surplus SLR of 73,000 crore rupees. So we have to see if there is a need base, we can use that excess amount for the corporate lending, etc. also.
Your CASA ratio has dropped below 40% this quarter. So I just wanted to get a sense as to what is the ideal number for you, or is 39% good enough?
Actually, we have given the guidelines that we will be in a position to reach 42%. I think considering the present scenario, because it is very difficult to maintain the same pace of the CASA, whatever the increase in the deposit. So I think 40% is an ideal situation.
Okay, 40% is the ideal situation.
That is, of course, how other banks have done. But let's move on to another set of earnings this morning. Tata Technologies. Earnings slightly below what the street would have liked to see, but let's understand what the second half looks like, because management is confident that H2 will bring with it some good news. Warren Harris, MD and CEO of Tata Technologies, now joins in. Good morning, Warren. The last time we spoke, of course, it was mid-quarter, but good to have you back on the channel. You want to walk me through how the quarter has been? There were some factors that contributed to slightly below expected revenue growth. There's a decline in services as well. You want to share with me what's going on and also give me a sense of a sequential decline. We've seen that too for Tata Tech this quarter. What is it that we should be expecting going in the second half? What led to a subdued or a somber Q2?
Yeah, well, always good to come back, and thank you for the opportunity of being able to profile the results of Tata Technologies. Just to challenge the comment that you made, revenue was sequentially up as we'd guided in the earnings call of Q1, and so we delivered against that particular promise. But what we did see towards the end of the quarter was just some delayed decision making that was primarily driven by the uncertainty in and around the US election. I think the policy positions of both sides are somewhat polarized, and so I think many of our customers are looking for clarity before decisions, particularly in terms of new products, are confirmed. And I think in Europe, I think the threat from China is certainly growing. I think the competitive advantage that the Chinese OEMs have in terms of tech and in terms of cost are prompting some of the European OEMs to look to the regulator for some form of protection. And we expect that to come in the early part of the next calendar year. So the headwinds that we faced towards the end of the quarter, we think they're tactical, and that's why we guided yesterday that we expect the second half to be better than the first, which really speaks to the underlying confidence that we have in the momentum behind the business.
Just one quick question, of course, and I'll toss it over to my co-anchors. With the BMW JV starting in November and projected to reach $100 million run rate, can you give me further sort of details into the expected timeline for revenue recognition from this partnership? And also with the recent deal that you won with Air India, what is the scope of work? What are the timelines? And when will we see the impact of this on revenues?
Well, we're really proud of the partnership with BMW. We begin trading within the JV on the 1st of November. We will have 100 people in the JV that will start at that point. We expect to scale the team to over 1,000 people within the next 12 months. And as we guided yesterday, we expect the annualized run rate of that joint venture to be over $100 million within the next couple of years. You know, this is a really strategic commitment that BMW is making to Tata Technologies and to India. And when they looked at partners here in India, they undertook an exhaustive search of all of the candidate organizations that are in this space and made a decision to partner with Tata Technologies, which I think is really a testament to our capabilities and to the confidence that BMW had in the values that underpin the Tata Group. So we're really excited, not just about the direct business that will provide, but also the halo effect that will attach to the Tata Technologies brand. You know, as far as Air India is concerned, we've been working with Campbell Wilson and his team since the Tata Group acquired Air India. We've been doing a lot of work in terms of re-engineering parts for interiors to take some of the legacy aircraft and make them airworthy again. This partnership that we announced yesterday certainly reinforces the commitment of both companies, but positions Tata Technologies in support of the MRO, the maintenance, repair and overhaul investments that Air India are intending to make here in India. They are planning to stand up an MRO facility in Bangalore in the next 12 to 18 months, and we will be central to that particular plan.
Absolutely. Hi, Warren. Good morning. Tamanna here. Just a little bit more detailing on Air India, and I know you've refrained from any numbers on BMW as well, so I'll try and push you on that. So we have the broad idea, right? Redoing the interiors. Now, what is the scope of that? And any kind of revenue outlook that you can give us, even in percentage terms?
Well, we don't provide revenue guidance, but what I will say is that we are increasingly focusing on our top 20, top 25 customers, and we expect Air India to be one of those companies. We're very proud of what the group has already done with Air India, and we think we can make an enormous contribution to the flying experience of passengers by being part of the investment that Air India is making in improving the seats and the overall cabin experience. We've got significant experience there in terms of the work that we've done within the aerospace industry over the last 10 to 15 years, and we certainly expect to mobilize that in support of Air India and through the work that we undertake for us to scale the revenues that represents to Tata Technologies.
The size of the deal. What is the size of the deal, Mr. Harris, with Air India?
I'm not at liberty, given confidentiality commitments we've made to Air India, to size the deal, but it's material for us.
And this starts flowing into second half? H2, will we see any recognition in this financial year?
We will see our business with Air India grow in the second half of this year, and we certainly expect it to scale as we plan for FY26.
All right. So let me just come in a little more detail on your numbers. Your margins were flat this quarter, but if I look at your segments, and your service segment has seen a bit of a slide in gross margins, your technology solution segment even more so. Any particular reason, and do you see this correcting in Q3 and H2?
We actually saw sequential improvement in GP and operating margins, which I think is a testament to the operating discipline that we've driven into the business. We've seen an uptick in utilization and offshoring, and we've also seen improvements in terms of our people pyramid. So I'm very pleased with the operating margin performance in the context of some headwinds that we've seen in the market related to the tapering of growth of electric vehicles.
Just one point that I wanted to understand from you is on VinFast. What is the outlook there on one of your biggest clients, and how large is the concentration of revenue with VinFast currently?
Well, I think we've spoken previously about the fact that after the first quarter of this year, we're out from underneath the runoff that we've seen at VinFast over the last 12 months. This time last year, or in Q2 of last year, VinFast was one of our top 3 customers, and we've managed to backfill that revenue over the course of the last 12 months. So VinFast right now is a very small part of our overall mix. They've celebrated the launch of the 2 vehicles that we've developed for them, the VF6 and the VF7. The market has reacted very positively here in Southeast Asia, specifically to the 2 products that have been launched. And as soon as VinFast start to develop some traction in and around sales, we expect them to further invest in new product. And given the relationship that we have with that organization, we would expect to be part of their future investment and future product plans.
Okay, just a last question, Mr. Harris, since you spoke about halo effect in context of BMW, just trying to understand what is the growth you're seeing in your next to top 5 clients. Are you working on boosting the revenue share, and is that where you're seeing growth coming in?
Yeah, we're seeing broad-based improvement after Q1, and so we've seen growth across our anchor accounts. We've seen growth across our OEM clients, both in automotive, aerospace, and industrial heavy machinery, and we're also starting to see significant pickup in the tier ones. I think one of the challenges that the tier ones are going through at the moment is that they are disproportionately impacted by the slowdown in automotive and the slowdown in EVs. And so they're going through a lot of supplier consolidation and a lot of investments in terms of efficiency. And so we're very much a part of that. We've won a couple of deals in the second quarter in and around consolidating the offshore development centers that we've set up for tier ones in the past. And we're also doing a lot of work with our digital proposition and specifically deploying AI in manufacturing facilities for the tier ones to drive and improve manufacturing throughput and efficiency.
All right. Thank you so much, Mr. Harris. Always a pleasure to speak with you. Tata Tech there on the quarter gone by. And the Air India deal seems like it's an exciting one. I think the one big takeaway clearly is that they will see revenue recognition in the second half of the financial year from the deal for Air India. With that, it's a wrap on India Market Open. But stay tuned. Up next on Talking Point, we will be hearing from Ravi Dharamshi of Value Quest Investment Advisors about his top sectors on Dhanteras.